Okay guys, welcome back. I'm going to do my end of the day video today, starting right now. We got a couple hours left in the trading day. They could still pop it, but what I'm seeing in the market right now, everything that I'm seeing, all the signs are telling me that we are going lower and we are now in a bearish trend. So the bullish trend from my perspective and from what I see in the charts is over. We're now in a bearish trend. And it's really a sell the rip market. So let's get right into these charts. In the previous video I put out this morning, I said watch Apple. So I queued everyone up. I saw it playing out real time. And in my notification post, I said watch Apple. It's breaking. And I was pointing out, if you look at the 1 minute basically, well really the hourly, this is the break. This is when I put out the post right here. I said, look, the Apple's starting to break support at 108. I forget the exact level that I called out, but basically said that we're starting to break support. I think it was like 109.20. And we were sitting right about here. That I said, if Apple breaks, the market's it's going to break. So Apple broke and the market broke essentially. So Apple broke, fell down. Here's where we're at right now. So we've got this gap coming back here, and the gap is right about 106.38. So again, that might be the end of the move for today. And they could even bounce it or rally this up a little bit. But ultimately, we broke that support. So that tells me that we're heading lower in Apple. And let's look at the Qs and the bigger picture. Obviously, you know, that's just small stuff that we're looking at. But the bigger picture is we'll look at the daily here. Here's your uptrend for 2020, the entire year. And we broke that trend. It's cleanly broken. We continue to see downward price action. So it's a sell the rip market. You can have rips, you can have rallies in this downtrend. Expect them to come. But when you get to major resistance levels, that's where you step in and in short. So you don't necessarily want to step in and short right now after, everything's down a bunch. You want to wait till it rallies up to resistance. Same as when you're going long, you want to buy at support. When you're going short, you want to sell at resistance. Okay, so here's triple Qs continuing the down move. So here's what really looks like it's in play now, and it's really starting to play out, is this bear flag. So we've got the flagpole right here, and we have the flag, and I'm just drawing it out kind of rough just to show everyone what's kind of going on. And then the continuation is something like that, probably a little shorter, but maybe something like that. So that puts this move down to about 254, it looks like, maybe slightly lower. Somewhere in that area is where this should play out. And if that plays out, I just want to kind of cue everyone up for what might happen. We're going to the weekly now. And the weekly chart, if this plays out, then that's going to put us below the uptrend. That's this line right here. Here's your channel. See your price channel right here in triple Qs, going back to 2009. If the bear flag plays out, and as of right now, it is playing out. So the measured move would be down around this 254 area. And if that plays out, we'll probably get a bounce there, but we'll be back recaptured within the channel. So what that tells me is we probably bounce there. We bounce up to the top of the channel around 259 or so. And that's where 260, that's where resistance is at. And we then continue to move lower. We could chop around and consolidate a little bit right in that area. And we continue to move lower, working our way down over time to the bottom end of the lower end of the channel. So 225 or, depending on when it actually gets there. So that's a setup or a hypothetical of what might play out. But I think it's important to understand. I always have in my mind, I see the charts and I see what might play out if certain levels break. And then when I see it actually take place real time, I know what's happening, or I can at least anticipate the probability of what could happen. And that's how I do it. So typically I always want to know what could play out before it actually does, so that when it actually is happening, I'm not turning on CNBC and reading and trying to figure out what they're telling me why this is happening. That's after the fact, and it's not going to help you. Okay, going back to the hourly. So, they could rally this into the close, but I wouldn't expect it really going beyond this 267.50 level, basically where we broke down from. We broke down. We could see a back test, and I'm watching for that. If it recovers, then that's we'll have to watch for that. But as of right now, I think it's in play to continue to break down. So that's what I'm gonna anticipate. Okay, volatility. This is also a potential trade idea. Again, everything in this video is just my opinion, but the volatility, I said in my last video, I said if Apple breaks down, the tech's going to break down and volatility is going to spike. And here's the spike that it's done so far today. That's a move from the lows. About the lows to the highs was about 8%. So there's your spike. And I think we're going higher in volatility. Not all at once. It's going to take time. But volatility, if we get the breakdown, you should see that kind of moment, I guess, where the longs, going back, we could look at the SPY, but going back where all these dip buyers, here's what's going on, basically, at least what I think is going on. Here's your uptrend. And so everyone who was riding this uptrend got extremely bullish because they just saw their account going up constantly every day. And then towards the end, they just saw their account just, going up massively. So they think that's always going to continue, and they throw out the possibility of any losses ever coming because it just hasn't. They just have been making money hand over fist. So then you get the breakdown here, and their first reaction is, okay, buy the dip. We're going to continue the uptrend. It will get back to what it was. So they buy the dip, it bounces, but it gets sold into. They buy it again, it bounces, it gets sold into. And then finally the sellers take over, and anybody who had been buying the dip, now they're taking on more losses. So there will be a moment in time where they're going to say, you know what, maybe I don't want to give up all my profit that I made, and I'm going to start to sell. Or they'll hold it and take on more and more losses, and then all of a sudden say, you know what, I can't stand it anymore, I'm losing all my money, and they'll sell and panic sell, essentially. That's the moment when you get that aha moment where people start to question the bullish buy the dip mentality. That's when the VIX pops. That's when it will explode. So that's when you'll see moves going back to like this. This, if I go back to UVX, if I can narrow it down, this was, if I mark it up, I can kind of mark it up something like this. But basically, you get this trend and you break the trend. So here's the break in the trend right here. So you break the trend, but then it's back to the same old thing, buy the dip. So then you get the dip buyers and volatility collapses. But then when the selling really starts to come in again, you get this aha moment where they're like, I don't really know what's going on anymore. And you get the panic and the shift from the bullish to the bearish momentum. It's during that time when the shift is happening from bullish to bearish that you get the VIX explodes. And that's when the VIX will do stuff like this. It doesn't necessarily have to go all the way up here, but you'll get big moves in the VIX. And that's what this looks like. Going over here, same setup. You get the break, okay, buy the dip people. They say, I'm going to buy the dip in the market. Markets never go down. So they buy the dip, the VIX collapses a little bit more. And then as the VIX as the market starts to sell off again, they say, you know what, this is crazy. So then, we get something like that. So that's what the setup is. That's what I'm looking for here in the VIX. Again, these are volatile, so, you have to give them room. And I don't load up on these. I take smaller positions in these volatility instruments. They are volatile. They can go the other way. This doesn't have to play out like this. This can go the other way, and you don't want to get wiped out. Okay, let's look at gold. This is an important one. I always watch gold, and the dollar just gives you an idea of kind of the macro setup, what's happening. It's always good to know which way the river's flowing and try to paddle with the stream. So gold, again, we're just pinching. If I go to the daily here, just pinching within this pennant here, this triangle, and we're at the apex now. I mean, it can go maybe one more day, but really, it's coming to the point where it's decision time. Here's the hourly chart, and yeah, we could adjust this slightly, something like that, but we're basically there. So should make a decision. Probably not going to happen today. They're gonna leave us guessing, and Monday we're gonna wake up to some gap, I assume. The futures will trade, they'll rip it higher or drop it, and that will be that. So again, that's what the market loves to do. They love to keep everyone guessing. I think that, I think it's going down. The reason why is you can't have everyone loaded into the trade. And I think a lot of people got loaded up into the trade right here on this big rip. Everybody, GLD and GDX and some of the gold instruments were huge holdings on Robinhood during this time. There were some of the biggest moves that people were making. And so when everyone gets loaded in, you got to flush those people out of the trade in order for it to continue to run higher. Because if everyone buys in, there's no buyers left. So you need to dump it out, and then buyers will step back in and buy down near support. That's what keeps a longer-term bull market intact, is the fact that you have corrections when things get out of hand. So I think we're going down, and going down to this 1790. So I'm going to continue to hold strong with that trade and think that that's what's going to happen until I'm proven wrong. And dollar's just kind of drifting lower a little bit today, but not much. Dollar's basically been sideways for a while since it broke out. Was sideways, consolidating. And I assume that it's just taking time to build energy to pop up to 95. So that is what I think is happening there in the dollar. You can see right there, we've got some positive divergence. And we've been making kind of equal lows right here. So that's positive divergence where you have an equal low, but the momentum indicators keep making higher highs. So that shows that. I don't see it there in the PPO, but see it in the RSI. Healthcare, XLV, second largest sector in the S&P 500. And, kind of flagging out is what this looks like on the hourly. We've got this flag right here, something like that. This should resolve soon. There's your flagpole. Should make a resolution to the downside, something like that. Maybe we get some more price action there, or maybe it drops all the way down to 97. But I think that's, in general, the direction that this thing's heading. And that's what I see on this one. XLF. XLF has broken trend, and it is just hanging in there sideways. But as you can see, it's getting farther and farther away from the trend line. So again, I think if there's, at this point, I don't think they're going to recover XLF because of tech. When the trend was intact, the general trend, because tech was strong, they kept trying to recover XLF. But now XLF has clearly broken the trend here, and I can move it up slightly, but it's broken this trend here, and the recovery now is quite a ways away, and tech's not there to really help out either. So I think we're heading down in XLF at this point. Tesla, this one I think breaks next week, but again, that's just a guess on the timing, but I think it does break. Here's the hourly. Here's what we got going on in Tesla. And if we break next week and we get some sort of impulsive sell down, then it is playing into that bubble chart that I showed everyone, where a couple of videos back, where you have the euphoric move right here. You get the initial drop, and then you get the back to normal phase. This is the return. We're returning back to euphoria, and then it fails, and then you get the panic selling, basically. So if that happens, then this bubble is popped and will continue to deflate. And I think that we head down to at least 131. Well, I guess maximum probably 130, possibly this one. There's a level right here as well. I've been looking at this, but possibly this 180, about 180, 182, I guess. There's some gaps right in here. So this zone right in here, and I marked it out in this purple. This would be kind of the target zone, I think, for intermediate traders. Longer term, I think it probably goes lower, but I think it would at least hit this area of anywhere from 254 down to 224, maybe undercut slightly. So you should get a reaction in that area at some point in time. If this is going to crash, it's not going to do it all at once. It's going to come down, hit some sort of support. You're going to rally. It's going to work its way lower. Adobe here. So Adobe is, I would say Adobe's at support. It should hold right here and maybe get a reaction and then, you know, break down. I think it's continuing to go lower, but you can see here we have this trend line right here, and we're right at it right there. So maybe we get a little bounce before going lower, but that's just short-term stuff. If you look at the daily, here's your big trend. Here's your 2020 trend. Broke trend, back test once, back test twice. This is the area that you'd want to be entering a short, you know, is right at a back test. And, you know, this is you'd be wanting, you know, you'd want to take that short on a day where Adobe was up 7.5%. That's when you enter the short. And if you did that on that back test, you would have been profitable by 15% at this point. So that is, you know, I think we consolidate here, get a little bit of a reaction, and then break next week probably. NVDA, I am short this one. And this one is still looks really good. Looks like there's some more downside here. So still close to the back trend line here. Here's the back trend, or sorry, the uptrend right here, and we broke that, chopped around a little bit, but we're starting to continue to resolve to the downside. Here's the hourly chart. You can see we kind of chopped around here, but as I said in the video, we kept, every time they popped it above support, it kept getting rejected. It was rejected here, rejected here, rejected here, rejected here, and now we're down towards the bottom of this range here. So that sets us up for what I see as a bear flag. So there's your flagpole, there's your flag, you break down, head down to maybe this 390 area, somewhere right in there, depending on depending on when we get there and how it breaks down, but I'd say that's kind of the area. PayPal, and you can see this is what happens when trends break. It's obvious now, to me at least, and it's been obvious, I mean, but the uptrend in tech is broken. So the best you could hope for is sideways, I think. And here's PayPal, down another almost 2%. Continue, you know, here's your uptrend. I had it marked out. We broke. You know, here's your back test, broke, selling off impulsively. Netflix, same deal, uptrend, broke, selling off. KHC, this one is something I'm kind of interested in as a long-term hold. Potential head and shoulders, inverse head and shoulders bottoming pattern that could be in play. And so I've got the right or the left shoulder marked out down here, right shoulder or the head right here. Maybe we're coming down to this 25 level to make a right shoulder. And then that might be the kind of bottom of that right shoulder, and then we start to move our way up and eventually do a gap fill all the way up here at 48. So I'm going to be watching to see if we can hold. If we get down to this 25, can we hold that level? And if we do, you know, I might take a position to the long side looking for that gap fill. Flipping over to my trading platform. And if anyone that's curious, I use Lightspeed Trader. It's a desktop-based trading execution platform. It's available for fast trading executions. It's not free, and it does require a margin account in order to have to use it. But again, it's just the platform that I choose. But you can see here, VXX volatility is starting to expand. So you've got the big lift up, kind of a flag. We're still holding in there. I would say volatility is probably going to close elevated up in this area, higher basically, and we'll watch for continuation of volatility expanding next week. Here's one corn. I've taken a long position in this a while ago, and I pointed it out just briefly in a few videos, but you can see we have this downtrend line right here, and you can see it marked it out right there. We broke that downtrend. Here's the break right there, back test and running higher. So there's still bullish, you know, there's still things to go long on in this market. And so I think we, continue higher, maybe up to this $14 area in corn. Not the best area to go long now because it is kind of in the middle of middle of the zone, and it's a higher risk area to go long, but does look like it's going to continue. And finally, we'll wrap with the broken bond market. I say it's broken because the Fed has basically taken over the bond market. Even if there was selling in the bond market, the Fed's in there buying it. They're printing money, creating money out of thin air and buying it. So there's an indiscriminate buyer. They don't care what price they're buying it at because they create the money out of nothing. There's no such thing as losses to them, essentially. So they can just buy anything at any price. And bonds are continuing to just kind of hold steady, but they did sell off a little. So we'll see. I would think if the Fed's in here buying and the market starts becoming fearful, the market will start buying bonds as well. And we'll see bonds do that, go up, make another leg higher. So watch for that. That might be we can't get a signal based on the price action right now, but if we see a big lift, then that is potentially the market buying bonds, just trying to rush for safety for kind of a risk off trade. So that's all I got. That's really all I have in the video. Want to wrap up here. If anything crazy happens, I'll put out another video, but I think that's probably going to be it for today. And we'll go ahead and wrap there. So thanks, guys. Catch you on the next one.